Did you know with $5,000 only, you can unlock your dream home? That dream can become a reality with FHA loans. A modest down payment can open the door to your very own $150,000 property. Property like this, or even a property like that, or like this. Any of these properties could be your next home. And I'm here to help you learn how you can transform these $5,000 setting aside into a lifetime investment. Hello? Hi. Oh, I think you got the wrong number. You did not. Okay, so you're watching my video and you're telling me you don't have the 5,000. All right, I will take care of that. Well, some of you is asking me, what if I don't have the 5,000? Well, I've got you covered. Don't worry, because I actually have some mind-blowing techniques and insights that will help some of you make it happen. Even if you are starting with absolutely nothing down. Yes, you heard that right. Zero. All right. With that being said, let's tackle a misconception that could be preventing you from moving forward. Before we talk about the power of 5,000, we want to tackle a misconception. There is a common misunderstanding floating among us that you need at least 20% down payment in order to buy a home. In reality, this couldn't be farther from the truth, especially with FHA loans. Many believe that you need at least $30,000 to purchase a house worth $150,000. In reality, with FHA loans, a modest amount like $5,000 can indeed set you on the path to owning the $150,000 home, like the one I showed you earlier. And there is tons more. And by the way, these were just in South Florida, where the market is even hotter than most other places in the US. Just imagine an amount of $150,000, what it can do in cooler markets. Now we have Shatter, the 20% down payment math. You might be wondering, what makes FHA loans particularly special and accessible? Well, stick with me. We are just getting started. Let's clean the dust a little bit more. There is another common misconception out there, that is, FHA loans are only for first-time buyers. While many assumes FHA loans are exclusively for those new to home buying arena, but that's not the case. Whether you are buying your first home or your next, one unit or two, FHA loans can offer flexibility and benefits for a variety of buyers, especially for homes that are on the lower price tag side. The advantages becomes even more. These loans are designed to make home ownership accessible and affordable, breaking down barriers that many faces in traditional lending market. But don't let that fool you. FHA loans can go up higher in certain areas under certain conditions and qualifications. I will leave you a link in the description for the FHA mortgage limit page on the HUD website, where you can find exactly the loan limit for your area and state. While we'll begin to dive deeper to uncover the unique advantages of FHA loans, you might be curious about the specific steps and requirements involved. Just stick with me as we will explore the path to navigating our $5,000 down payment effectively and what you need to qualify for an FHA loan later in the video. I have a story just came in mind that related to this, which is low down payment means worse loan term, aka interest rates. While this common fear can be legit sometimes, it's not always the case. I had a client who began with just $5,000. Not only did she secure a home that worth $150,000, but she also benefited from manageable terms, and she was able to lower her interest rate and even got the seller to cover most of her closing costs. Spoiler alert, she has a decent credit. But don't worry, I'm going to help you with that too. More on that later on. These favorable conditions allowed her to invest in her future without being overburdened by debt. Now, knowing that small down payment doesn't really mean unfavorable terms, let's ensure you start on the right foot. How can you navigate the path for $5,000 only? So there is a missed fact out there. It's the loan pre-approval. This pre-approval is more of a guidance. Starting your home buying journey with pre-approval is crucial, yet often missed. With $5,000, you are not dreaming anymore. You are ready to act. Pre-approval gives you a clean understanding of what you can afford, setting realistic expectation for your FHA loan. When choosing between lender, consider who offers the best rates, customer service, and FHA experience. A specialized lender might provide more personalized service, while bank can offer convenient if you're already an established customer. The right choice depends on your specific needs and financial situation. My recommendation though, if you feel overwhelmed while researching lending options and need assistance, feel free to contact me or leave me a comment. I have a network of trusted lenders that I have worked with in the past that I can recommend. But before you go ahead and start submitting those applications online, start calling those lenders, you must be aware of their qualifications and requirements, right? Because you're not just dreaming anymore, you are ready to act. And we are going to take care of that in just a minute. In the meantime, why don't you get something to drink and get relaxed? Because we are diving technical, baby, really deep this time. And while you are at it, it won't hurt you if you hit the like button. It would help me a lot. And if you want to see this head talking again, you know where is the subscribe button. You must know how to do the basics, right? I'm just kidding. I would gladly appreciate it. And with that out of the way, let's continue diving. While starting right is essential, understanding FHA loan qualification is the key to unlocking your dream home. You know, I love misconceptions, right? Let's take care of this one. Qualifying for an FHA loan is nearly impossible. In reality, many are intimidated by the qualification process, but let's simplify it. Here are the primary requirements for an FHA loan. First, a minimum credit score of 580 is typically needed to qualify for the low 3.5% down payment. However, even if your score is between 500 to 580, you might still qualify, but with a higher down payment, of course. Overall credit standing plays an important role. Like my client I mentioned earlier, she was able to secure good terms and competitive market rate because her credit score were on the higher end. But you know me, I won't just leave you hanging. Here are some tips to prepare your credit for the prom night. First, take control of your finances. Credit score is all about financial responsibilities and how financially responsible you are. Get your credit report from all 3 credit bureaus. It's free, why won't you do it? I'm gonna leave the link in the description for you. Go there, sign up, make an account, and get all your credit report. Read it, understand it, and see which area needs to be improved. You can utilize apps like Credit Karma. If you are not already, you should. It's a great tool to keep you up to date on your credit score, and it's also totally free. The second one, avoid missing any payment at all costs. No exceptions. Pay the minimum. Just make sure you pay it. You can't imagine how bad this could hurt your credit score. Third, pay off collection when it's financially manageable. Lots of people I know left their credit to drown under collection they didn't even expect. Remember you opened a credit card in some retail store and then you used it at a gas station for like $10 for something, and then you forgot about it and you lost the card. Few months later, you have few missed payment and a collection for like $50 including fees. Crazy, right? Well, it's a true story. It happened to a lot and it cost way more than $50 in credit damages. So take care of those small things. It will help show you are serious about your financials. For the fourth tip, just don't. I will say it louder this time. Never make any big purchases using a credit line while planning on applying for a mortgage, especially during closing process. And tip number 5, don't apply for any credit line before or during the pre-approval process. That include credit cards, buying a furniture, 0 down, we've all been there. Going on a vacation and choosing to pay later because Airbnb are so generous, don't do it. All of that will result in hard inquiry on your credit report, and that might and mostly will lower your approval odds. So please don't. And tip number 6, don't close credit accounts, especially credit cards. You can pay it off, but keep it active. Closing accounts can impact your score negatively because of the credit history contribution of that account. So keep that in mind. Now, here are some insider hacks on how to improve your credit score up to 50 points fast. I've been there, I've done that, and here is it. Hack number 1. Use services that help you report your monthly expenses and bills. like rent, utilities, stuff like that. These can help boost your score double digit in less than 30 days. I will leave a link in the description. Experian Credit Bureau actually offered this service for free. Hack number 2. This hack can improve your credit score 10 to 25 points. Look into your credit report of discrepancies. Mistake in credit report happens more often than not. If you find something you are not sure about, or you don't think it should be there, like a missed payment, a collection account, or even a hard inquiry, you can actually dispute all of that. And it's fairly easy. Credit Karma have that service also for free, but they actually make it seamless. However, if you need help doing that, just leave me a comment. Now hack number 3. This hack actually very underestimated. This hack can help boost your score 20 to 30 points. Keep your overall credit card limit utilization under 30%, ideally under 10%, and anything above 50% can hurt your score instantly. And trust me, you will feel it. This is not to be mistaken with debt to income ratio. We are going to touch on that in a minute. However, that being said, no matter what kind of credit report mess you have there, if you are above 500 and other qualifications we are going to talk about in just a minute apply to you, then by all means go ahead and get in touch with a lender. They have a variety of programs that suits all sorts of situations. Wow. With the credit score game out of the way, we can head into the second most important, your current employment status and history. This should demonstrate stability. Typically, for W-2 employees, it's 2 years of consistent employment being the ideal. That, however, change in the case of a self-employment or a business owner. But before we go farther, I have to go back a little bit to debt and income ratio. It's crucial as being able to live that dream or not. However, after understanding it clearly, you can tweak the formula to align with the numbers required. In simple terms, the debt to income ratio, DTI, is a way to compare how much money you owe to how much money you make. It's basically a percentage that shows how much your monthly gross income before taxes is used to pay debt. To calculate your DTI ratio, you add up all your monthly debt payment, like loans, credit cards payment, and mortgages. Payments that are regularly reported by lenders on monthly basis. These are considered your debt. And then divide that by your monthly gross income before any taxes. This result expressed as percentages. For example, if you pay $1,000 a month for your mortgage and another $500 for the rest of your debt, let's say credit cards and here and there, and your monthly gross income is $6,000, your DTI would be about 25%. Generally, a lower DTI ratio means you have a good balance between debt and income and are less risky to lenders. Different lenders have different thresholds. Luckily, FHA loans offer higher DTI ratio, up to 47% is often considered. I do want to note here that this video is for informational purposes only. It's good to know your number and where you stand, even if it's just for curiosity, but don't try to calculate all of that on your own. Between you and me, who would want to do all that boring math manually? So I will leave you 2 links in the description for a DTI and a mortgage calculator. And eventually the lender gets to decide if it's yay or nay. So do your math, go check those websites, see how much you can qualify for, put your income, put your debt, all of that stuff. Put it in there and let the website do the calculation for you. Trust me, it's fairly easy. It's also good to know that not all properties qualify for an FHA loan. Generally, single-family houses are most likely to qualify for an FHA loan due to their lower risk and easier compliance with safety and security standards. However, when it comes to condominiums, there are additional requirements and consideration. The condominium project must be on an FHA approved list, and there might be limitation on the number of units that can be financed with an FHA loan. It's also important to consult with a knowledgeable lender or a real estate professional to navigate those specific requirements for condominium purchases. One more thing that is really important to note, that property you are aiming at has to be your primary residence for the first year at least. Hey investors, I see you lurking in the corner. Hit that like button and share some love. I love you too. Now that we have covered the qualification and property consideration, let's address some of your burning questions. One of the common questions that I hear a lot, isn't mortgage insurance always a bad idea? Like, is there insurance there? Yes, there is something that comes with that FHA loan. Mortgage insurance on FHA loans are often misunderstood. While it's an additional cost, it's what makes the low down payment possible. The good news is it's not permanent. Once you have built enough equity in your home, you can refinance it into a conventional loan and eliminate that mortgage insurance. This way, mortgage insurance acts as a stepping stone rather than a long-term burden, allowing you to start your home ownership journey sooner. Now there's one more question I'm hearing from some of you watching. How about closing costs? Well, I was waiting for that. Closing costs are fees and expenses paid before getting the keys, typically ranging from 2 to 5% of the loan amount. They include lender fees, title searches, escrow charges, appraisal and inspection fees, prepaid expenses like taxes and insurance, government recording charges. These costs actually vary based on location and property price and can sometimes be negotiated with the seller. Remember about my client I mentioned earlier? The seller was able to cover most of her closing costs. And for your peace of mind, buyers usually receive a closing disclosure form before closing to review all charges, so you will have enough time to go over everything ahead of time. Now, with these insights and answers, let's wrap up our journey and how $5,000 can unlock the door to your dream home. And no, I didn't forget about the phone call earlier, but I don't want to bore you with any more unnecessary talk. Therefore, I will leave a link in the description for the program I was talking about. It offers up to $35,000 to help with down payment. It's called the Hometown Heroes program. I must note though, this program is in Florida, and I believe other states have similar programs as well. I have got you covered in Florida for now. Conclusions. Now let's recap the key points. Today, we have journeyed through the power of a $5,000 down payment with an FHA loan. We have shattered myth, uncovered truth, and revealed how this path can lead you to owning a $150,000 home. We have seen how a small down payment doesn't mean bad terms, and how mortgage insurance can be temporary stepping stone toward your home ownership dreams. We also dove into the requirement like credit scores and employment, and how debt to income ratio works. I hope this video was entertaining and informative, as I hoped it would be. If you are considering an FHA loan and or have more questions, I'm here to help. Reach out for a personalized advice and guidance. And if you found this video helpful and did add a value to your life and worth your time, don't forget to like, subscribe, and share the love with others. Remember, your dream home might just be $5,000 away. Ciao.